Welcome to the deep dive. We sift through all that complex info out there and pull out the clearest insights for you. Today, we're diving into the, well, often pretty wild world of financial markets. Specifically, we're looking at Solana, SOL, and its recent price moves. We've got an expert chart analysis, and our goal really is to help you understand the key technical signals shaping where it is right now.
Exactly. And the source material we're using today, it's pure technical analysis. It's all about reading the charts, language support, resistance, corrective patterns, that kind of thing. It's not about predicting the future. Let's be clear on that. It's more about understanding the structure to see what could happen next.
Okay, so let's jump right in. According to this analysis, where is Solana sitting at this very moment? What's the immediate snapshot?
Right now, the analysis paints a picture of consolidation. So Solana's kind of hovering above what the expert calls micro support.
Yeah.
There's this potential for a move up, definitely, maybe towards $360, possibly higher. But, and this is a big but in the analysis, it really needs to stay above that August low. That's around $156. If it holds that, then the upside case looks much more solid.
Okay, $156 is the floor for now. That naturally leads us to support levels, right? The foundation of these charts. The analysis mentions a few key areas. Can you maybe break down what these support levels actually are and why they're so important here?
Yeah, absolutely. So the analysis points to a Fibonacci support zone that's being tested as we speak. Now, Fibonacci, for anyone maybe not deep into charting, it uses these specific ratios based on a mathematical sequence. It helps project potential zones where price might react based on past moves. Think of it like price memory. And alongside that, there's this yellow trend line mentioned, which is apparently quite significant on the bigger picture, the larger time frame. These two things are kind of coming together right now, creating these potential support levels the expert is watching.
Got it. And the analysis actually gives us specific numbers, specific prices to watch within these zones. First one is $177. What's the deal with that particular level?
So $177 is described as the 100% extension of an A wave down. Basically, think of a correction after a move up happening in stages, often three parts, A, B, C. The A wave is that first drop. The analysis suggests $177 is where the C wave, the potential final drop of this immediate pullback, might ideally end. It's a calculated target for this corrective move finishing.
Okay, so A wave down, C wave target. Makes sense. Then there's $165. That's flag is really important too. Why $165?
Right, $165, that's identified as the 78.6 retracement.
Yeah.
That specific Fibonacci ratio, the 78.6, is often seen as maybe the last major support level in an uptrend. If price holds above it, the uptrend can still be considered strong. If it breaks significantly below, well, that's less bullish. And what makes $165 extra critical, according to the source, is that the yellow trend line we mentioned, it converges right there too. So you have two important technical factors pointing to the same spot. That's why it's called critical support.
Ooh.
Oh, and they also mention $174.20 just as another Fibonacci level close by, something else to keep an eye on near $177.
Okay, multiple levels converging there. Now, the analysis goes a bit deeper, looking back at Solana's previous move up. It talks about whether that was a 5-wave move or a 3-wave move. Why does that difference matter for what's happening now?
Ah, yes, that's actually a really crucial distinction in this type of analysis. See, a 5-wave move usually signals a strong directional trend and impulse. Think strong momentum. A 3-wave move, on the other hand, is often more corrective. It can be just a bounce within a larger downtrend or part of a more complex sideways pattern. The expert doing this analysis says they lean towards the yellow count, which implies it was 3 waves up, then 3 waves down. And they base this preference just on the proportions. Basically, the shape of it looks more like 3 up, 3 down. And why that matters is it changes how you interpret the current pullback. If the prior move was corrective, 3 waves, you might expect a different kind of correction now compared to if it was impulsive, 5 waves.
Right, so the nature of the last move influences expectations for the current one. Interesting. So we know where support might be, but what about the correction itself? Is it almost done, or could this drag on? What does the analysis suggest?
Well, this is where some uncertainty comes in, according to the source. The expert literally says, I'm not sure if we get that one more low and then it's over, or if it will form a more complex correction. The key takeaway here is, I have no evidence that this correction is actually complete. That's a direct quote. So the implication is we could see more sideways chopping around, more consolidation, and there's a possibility it could even develop into something more complex, like a WXY pattern. A WXY is just jargon for a messy, multi-stage correction. Think sideways and complicated, not a quick dip and rip.
Okay, so patience might be needed. The analysis also touched on trend lines again, specifically very steep ones.
Hmm.
What was the point there?
Yeah, that was a useful little aside, actually. It mentioned a steep trend line being watched for maybe a local low, but the caution was typically when these trend lines are very, very steep, they are not so relevant.
Mm.
Apparently, you get a lot of fake signals from them
Mhm.
because they're just too steep to hold, right? Price breaks them easily.
Mm.
It often represents a quick burst of emotion, not a sustainable trend. Good general charting tip there.
Good to know. Not all lines on a chart are equal. So let's flip to the other side. Resistance.
Yeah.
Where does Solana need to break above to really signal, okay, we're moving up again?
The analysis specifically points out resistance here at $206.76. And the point made is pretty clear. As long as we stay above support, below resistance, there's not really any breakout. We're just stuck in a range. To get a clearer sign that a new, strong upward move, what analysts call a third wave, has started, you'd want to see a five-wave move up from the lows. That impulsive structure is the confirmation they'd look for. But right now, there's no evidence that this is the case. Still consolidating.
Okay, so putting it all together, what's the core message for someone listening? The analysis calls this whole thing a B wave. Why is that label significant? What does it tell us about this pullback?
Yeah, calling it a B wave is important because in Elliott wave theory, B waves are notoriously tricky. They are corrective waves, often complex, and they can fool people into thinking the trend is resuming when it's not quite ready. It basically reinforces the idea that this is likely a corrective pause, potentially with more sideways or even another dip before the larger trend might continue. It signals caution, essentially. And that's why the expert emphasizes wanting to see the price hold above $166. That's the key level. Below $166, the odds shift. And it suggests maybe this correction is becoming something bigger or deeper.
Gotcha. B wave means correction, possibly messy. Watch $166. And what about right now, like the next day or two?
Well, the analysis mentioned the weekend, especially today, looking pretty quiet. But the advice was be ready for potentially more noise soon. More choppy price action between that support around $165, $177 and resistance up near $206. The quiet might not last.
Okay, let's wrap this up. So for you listening, the key things to take away from this deep dive on Solana, keep those support levels on your radar. 177 cents, definitely $165, maybe $174.20. And critically, holding above 166 cents seems vital for the bullish case. Understand this is seen as a corrective pullback, maybe a B wave, and it might not be finished yet. We need more evidence, like that five-wave move up, to confirm the next leg higher. Really, understanding these technicals gives you a kind of map for navigating the price action.
It does. And what I find really fascinating about all this is how these patterns, Fibonacci, wave counts, trend lines, they're like a window into the market's collective psychology, right? Which leads to a bigger thought, maybe. In this world where information just flies at us